Welcome back to Morning Markets on Wednesday the 17th of November. Turning first to the markets yesterday, in equities in sterling terms, the FTSE 100 was down 34 basis points. A stronger day for the US, up around 0.6% on the S&P 500, around 0.8% on the Nasdaq. Europe was up 0.35%, Japan up 0.1%, in Asia, stripping out Japan, was up 0.5%. The US was the strongest performing equity market on the day. We received several very positive reports coming through, adding momentum to returns there. Yesterday we received the US retail sales numbers for October. The report demonstrated a 1.7% month-on-month increase ahead of market expectations, with evidence of spending picking up ahead of the holidays. The report is positive as it's showing that there is both a willingness and an ability for US citizens to go out and spend despite a backdrop of rising prices. The US industrial production number was also stronger, up 1.6% over the month of October as manufacturing levels increased following an easing of the disruption to supply chains, mainly motor vehicle production caused by the hurricanes a few months previous. There was also signs that steps had been taken to ease tensions between the US and China and improve political relations. The two leaders held a meeting to begin to take steps to resolve the issues which is growing attracting the concern of growing armoury of nuclear weapons. In Europe, Germany and France, some of the stronger performing markets, supported by strong earnings and further comments from President of the European Central Bank, Christine Lagarde, that she expects the current elevated inflation pressures are likely to ease in the new year, therefore supporting the view of maintaining loose monetary policy at this point. However, the European Central Bank remains active in the management of policy. The FTSE 100, for which 70% of earnings are derived overseas, was slightly weaker on the day despite strong earnings reports due to a stronger pound. In terms of currency markets, in the developed market currencies, the more pronounced move was seen within the euro weakness relative to the US dollar and sterling. A few reasons for this, a key one being the positive reports from the US showing improving retail sales and the improvement in employment picture in the UK, which we discussed yesterday, stoking expectations of maybe a more hawkish reaction from the next meeting of the Federal Reserve and the Bank of England's monetary policy relative to a more dovish European Central Bank. So on the day you had the dollar, which was up around 0.5% against a basket of international currencies, the main one there being the euro. In terms of sterling, sterling against the dollar was up 0.1% to 134, and sterling against the euro was up 0.5% at 119. In terms of bond markets, yields on government bonds continue to move higher on the day. Over the coming days, markets are likely to be paying a close attention to the expected announcement for the nominee of the chair of the Federal Reserve, for which President Biden is expected to announce later this week. The two current frontrunners, being the existing chair Jay Powell and current Fed Governor Lael Brainard, are expected to both favour a more dovish stance, but Brainard is more clear that she would be more proactive in using monetary tools than Powell has been if required to managing inflation at this point. In terms of bonds, the UK 10-year gilt yield was at 0.99%, so just under the 1% mark, so that was 2.4 basis points higher on the day. In the US, the 10-year Treasury yield was 1.63%, so up around 1.6 basis points on the day. So far this morning, we've seen UK bond yields move marginally higher on the back of the inflation print, which reported a 4.2% annual rise in prices in October. In September, the print came in at 3.1%, so you've seen a pickup there. That is currently more than double the Bank of England's target of 2%. The key drivers were higher energy bills and the rise in prices in restaurants and hotels. If you strip out the more volatile components of energy and food, what we call the core index, that was up 3.4% from 2.9% in September. The current expectation from the Bank of England is the high inflation prints which we are currently seeing will moderate in the new year as supply chain disruptions begin to ease. In terms of commodity markets, in oil, Brent crude was at $82.5 per barrel, so up 0.6%, and gold was actually down around 0.7% on the day. Thank you very much for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.